Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond, recently discovered in Africa by a fellow Canadian junior. It is expected to sell in excess of 65 million US at Sotheby's, London, June 29th, with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service. Welcome back to the show, Ted.
It's great to be with you, Jim.
What kind of shockwaves are you seeing from the UK vote?
Well, let's start off with a speech that Mario Draghi gave today, and I'm going to read you one line from it, and that is, monetary policy has inevitably created destabilizing spillovers. Now, what is Mario Draghi saying there? Basically, he's saying, we've been doing all these crazy monetary policy moves since the financial crisis, and you know what? Some of the unintended consequences of this have been quite severe. I mean, that's basically as far as you're ever going to get a central banker to say, maybe this isn't working out so well. And, okay, so what does monetary policy have to do with something like Brexit? Well, when you look at who voted for Brexit, who voted to leave, well, it's risky making complete generalizations. Basically, you saw those who felt that they were losing from globalization and the aftermath of the great financial crisis voting to leave, and all the winners and the perceived winners who thought they could win under the current environment of low rates and globalization voting to stay in the EU. Well, the Leaves won, and I think that is what was the big shocker when you get down to it. Not that the Leaves won per se, but what it represents. Like, basically, the losers won this battle, and the winners aren't used to losing in this game. So that is what the big shock was. So, this is a political event, but it has economic repercussions, and we're going to see how this plays out. But, based off of what I understand Mario Draghi have said today, is that central bankers are now kind of taking a step back and going, we have to do something different, but we're not quite sure what that is right now. How this is all positive for the relentless U.S. stock market that never wants to go down, and I keep hearing how great the U.S. economy is and how everything in the U.S. is fantastic compared to the rest of the world, at least on a relative basis. How this plays out, I just can't see it playing out as a big positive, because when you look at the U.S. market, it has gone up lockstep with the Fed's balance sheet. That means as the Fed has printed more money and then amassed all these assets and liabilities on its balance sheet, the stock market has climbed with it. So this whole notion that the United States is immune from all this, that theory is being put to the test as we speak. And based off of what we see insiders doing in the United States, they've taken their marbles, and a lot of them have gone home. Now, it could be a lot worse, but thanks, well, I wouldn't say thanks, but due to a sell-off in the energy sector, we've seen a fair amount of insider buying there, although not as much as we did back in February when prices were a lot lower. But short of any bargains being in the U.S. market, I would suggest we're at a very destabilizing, potentially destabilizing point in markets. Not only do you have central banks sort of stepping back, it seems, from here, and saying, well, we have to think about this, but then you've also got the U.S. election coming up, which everyone has dismissed. But, Donald Trump has not backed down on his rhetoric. I mean, he has, if anything, has indicated that the results of Brexit vindicate his position, and that why the U.S. has to go slow at trade agreements. So, the Trans-Pacific Partnership, I guess everyone's assuming that Hillary is going to win, and then she's going to, flip-flop on her position, which is, all possible. But the fact of the matter is there's significant risk the U.S. will not sign on to the Trans-Pacific Partnership. And whether you like it or not, the fact of the matter is it would be another blow to globalization and all the benefits that it brought to asset markets. I don't want to say it brought benefits generally as a general statement, but if you were an owner in assets, it brought significant benefits because you were able to arbitrage labor away. And I mean by that, you're able to go into the jurisdiction with the cheapest labor. While Brexit is trying to stop that. That is, basically going to make it harder for companies to find the cheapest labor source in the world if this plays out. And again, it's early days. We don't know if that is going to play out. Maybe this is just a temporary roadblock for globalization that, we'll look back and say it was a footnote. That's also a possibility. But right now, uncertainties have definitely gone up, and any stock market rally here, unless it's driven by some real fundamental news, like the U.S. economy has decoupled from the rest of the world. We just see some great U.S. economic data over the next few weeks. Short of that, these rallies look very suspicious to me.
Britain's Finance Minister George Osborne says the fallout from Brexit will be higher taxes and government cutbacks. What about all the money that Britain would save by not having to pay EU fees?
Well, a lot of that was the rhetoric in the campaign, and again, the more the Remain side ratchets up the rhetoric, I think the more votes they lost. And Mark Carney, our former Bank of Canada governor, now Bank of England governor, he stuck his nose in it by warning about a recession and economic hardship, and that was probably one of the straws that broke the camel's back for this referendum. When everyone who feels that they've been losing under globalization, losing under QE, when they see the head of an organization that bailed out the banks through QE, and yet it's well perceived that the banks were one of the drivers of the financial crisis, people just said, oh yeah, well, we'll take our chances with the future instead of taking our chances with you. So it was a big rebuke to Mark Carney, and it was a big rebuke to Osborne. So, there's going to be new leadership. It's not going to be easy. But I also don't think that expectations amongst the Leave side are very high either. They just wanted to make a point that they were not happy with the way the new economic order was unfolding. Whether they'll be able to change the course of history, that's another question altogether. And the odds against them, of course, are quite low. But we'll see how this plays out. But one thing I think the odds are very high in favor of is continued uncertainty as policymakers try and work through this.
Why did British Prime Minister David Cameron dare the British people to vote to leave Europe?
Well, David Cameron is a skilled communicator, and he's his background is in public relations. So I don't know if that was a calculated move or just a slip, but it obviously didn't work. So I don't think we'll be seeing Hillary Clinton dare people to vote for Donald Trump in the next election. I think that strategy was, if it was ever being contemplated, will not be put to use.
Trump said the vote in Britain would favor his campaign. How would that how would that happen?
Well, essentially, he's saying that Britain has voted to take their country back from the EU, and Donald Trump's message, is along the same lines. He's trying to convince Americans they have to take their country back from global competition, basically taking it back from other trading partners who are beating them, according to Trump, China, Mexico. So so it's a similar line, and we'll have to see how this plays out. Again, it's a long way to November, and I've got to believe that along the way there's going to be some unsettling thoughts, that come across the news wires that the stock market's not going to like, but. Maybe not. We've been in this mode here with the U.S. market, has gone up quite substantially since the great financial crisis. But given how it's tracked the Fed's balance sheet, the Fed's balance sheet is now flattening out. I've got to believe that perhaps between now and the next election, and the November election, the best case is for the U.S. market to tread water, and then the worst case would be a significant correction along the way as people begin to fret about what would happen under a Trump presidency.
We'll have more with Ted Dixon right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond, recently discovered in Africa by a fellow Canadian junior. It is expected to sell in excess of 65 million US at Sotheby's, London, June 29th, with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Ted Dixon. Ted, do you think the vote in Britain will have Americans thinking twice about who they cast their ballots for?
I don't think that the vote in Britain is going to impact the decision by the typical American much. It's going to shake up the thought leaders in the U.S. media, and will put them on edge. However, at the end of the day, it's going to come down to how people feel about the economy. And, maybe there'll be some decoupling and almost miraculous breakthrough for the U.S. economy where it starts to, fire on all engines and really get some momentum coming into November. But I would suggest the base case is at best sort of 2% growth and sort of more of the same. And if that's the case, I'm not sure people want to vote for more of the same. Yes, if you've done well under QE, if you've been able to sell assets at higher prices, sure, you want to have more of the same. But as we saw in England, there's a lot of people who don't want more of the same, who are looking for a change, and they will gravitate to Trump, because I think as Hillary's Clinton's campaign unfolds, she will have to be the defender of the status quo compared to Trump, even though she's saying that she's not going to support the Trans-Pacific trade deal. We'll have to see how that plays out. That'll be a tough one for her. But perhaps she'll govern more from the right if she is elected, and campaign from the left, kind of how the Liberal Party in Canada does, and wouldn't surprise me if that's the formula that Hillary tries to do as well as on her path, her hopeful path to the White House. Again, I wouldn't predict a Hillary Clinton victory right now, but I can almost assure you that the consensus in the market is that she's going to win, and that she will save the day, and that everything will just be great. Well, I don't think it's going to be as simple as that, but one can only hope for a tranquil and sort of staircase straight up But I think that ride is done, given that the Fed, has basically on hold now, and hold meaning they're not going to be increasing monetary stimulus. If Hillary Clinton had her way, I'm sure she hopes that the Fed doesn't tighten like they promised. I mean, I can't imagine the Fed tightening. We were all skeptical, I think, that they were going to be able to tighten again, and we thought if they did, it would be to crush a potential real estate bubble in the United States. It looks like they're just going to have to risk real estate getting a little frothy here, and I just can't see how they're going to have a window to raise rates between now and the November election.
Domestically, the BC government says it will work with Vancouver City Council to put a tax on vacant homes. Is it going to make much of a difference if they do?
Well, the devil will be in the details. Of all the proposals, realistically, achievable proposal, the sort of a vacant home type surcharge is one of the better ones out there, because if you can actually implement it, but because it doesn't kind of identify where you come from in terms of, your ownership. It's just, if you're not using the property, you get taxed. So it could make a difference. It's one of the, as I said, it's one of the better ones, more creative ones. There are stronger measures that can be taken, but politically I just don't see them being adopted, at least by the current government. And, if you were to bring in a foreign, limit on purchases, that would definitely have an impact. I don't see the BC Liberals doing that. And what will be interesting, though, if the NDP do threaten to do that and they start to show up in the polls as potentially winning, that in itself could have an impact on the real estate market as people start, speculators and hot money starts to pull out on concerns that the NDP could win. So you don't necessarily need to see a foreign ownership tax implemented to affect the market. All you would need is one political party, in this case it would be the NDP, to adopt that as a policy position and then have a fair chance of winning the election to impact the real estate market.
Well, I think the idea of a tax on vacant homes is to encourage those homes to be rented out, because Vancouver has a shortage of rental space.
Well, that's true. And the other aspect that I kind of like about it, and it reflects the reality that we're seeing in the Brexit campaign outcome, is that it provides a mechanism to compensate the so-called losers in this whole flood of money into the Vancouver real estate market. So you have speculators who are winning, who are able to get in and out of the market and flip at a higher price. They're winning, and people who have been asset rich and who have owned homes and can sell, and that's a big part. You have to be able to sell to benefit. Just sitting on your home and watching it go up in value is not the same as exiting the market and taking your money and running. But you can compensate the losers from this tax if it does bring in the kind of money that they think it can. That still remains to be seen, how much they'll be able to actually get from it and what the rates would be. But in principle, it's a good idea, I think, because you do need to have some sense of fairness in the market. And the market right now is not fair. And anyone who thinks that the Vancouver real estate market is a fair market is, dreaming. They've got their head in the sand. It's, the practices that have been exposed. If what went on in the Vancouver real estate market went on in the stock market, people would be lined up in handcuffs, and sent off to onto the perp walk. It's just a ridiculous situation where you've got rules that are being ignored and prices that are being escalated one flip after another. If this were to be happening in the stock market, there would be repercussions to the players involved. Whereas here, we're still waiting for any meaningful disciplinary actions to take place, and I'm not holding my breath for it either.
Well, the FinTrack form is supposed to be filled out tracking where the money for that transaction in real estate came from, who's buying, where's the money going. but apparently the government has only asked for a handful of those forms to be handed in over the last 10 years.
And what I think that represents is that, and this is a bipartisan, I guess, a consensus that, in Ottawa, once you get into Ottawa, you realize that money laundering is helping to prop up the Canadian economy, and you don't want to really change that. So, whether it's a conservative government or a liberal government, it seems to me that when the finance minister gets into the job, somewhere along the way, he's briefed, and he realizes, oh my goodness, this is a huge part of the economy, we better not mess with it, because, if you were to start enforcing these money laundering laws vigorously, I think you would have a very significant impact on the amount of hot money that comes into the Vancouver and Toronto markets. But the federal government, either conservative or liberal, has declined to do that. So it makes me wonder why. And it doesn't take long to figure out, well, there must be a lot of dough at stake and, a lot more than we're led on to believe. And the repercussions of doing that could be destabilizing, so no government is willing to take the risk of actually clamping down on these money flows into the country.
Ted, with the markets in turmoil right now, is there any safe place to put your money?
Well, given the thrust of central bankers to bring in negative interest rates, you can't hold hard cash. It's not even safe anymore. Now, I don't think you'll see negative interest rates in the U.S. for a number of reasons. You could see other kind of experimental measures, but negative rates would be very difficult for them to bring in. But aside from cash, gold is a good diversifier, but it's very volatile. It doesn't guarantee you that the price of gold won't go down in the short term. But in terms of an insurance policy, it's very good. And aside from that, I think investors have to look at the typical value investing principles, where you want to be looking at companies that you expect the cash flow to amount to more than what you have to pay for that company. And in these periods of volatility, that's when you want to be looking for those opportunities. And if you can combine that with insider activity, if insiders are buying those same stocks, then that's a good indication that maybe true value is emerging, as opposed to a value trap where the price is going down because the business model is under assault, either through technology or through kind of regulatory or policy change. So you have to be very careful when you're playing the value game to make sure you're getting a bona fide business that's just being overlooked by the market, or there's excessive pessimism. You don't want to buy something, of course, that is at threat by an Amazon or a central bank coming to basically undermine the company's business prospects.
Ted, thank you so much for chatting with us.
Well, it's great to be here, Jim. My
guest has been Ted Dixon, CEO and co-founder of InkResearch.ca, Canada's first online financial news and research service. You're listening to HowStreet.com radio. You can find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.